welcome everyone to our second Comfortably Disturbing webinar. Now, our guest speakers today are Ian Macpherson, who is a co-founder of AFAN, and Leishan Smaller and Teresa Allery from Element Business and Accounting Solutions. But firstly, Ian Macpherson has over 30 years experience across several financial disciplines in Sydney, London and Tokyo. He is the former Vice President and Senior Advisor at Credit Suisse Private Bank and Division Director with Macquarie Private Bank. Ian is now the founder and Managing Director of Artemis Capital. He is a director and board member of a financial software company called XFM Tech. And as I mentioned, he is a co-founder of AFAN. Now, Ian, if I address the first question to you, we've seen a lot of measures put in place since the outbreak of COVID-19. What are some of the aspects of financial markets you see as relevant in today's environment?
Well, thanks, Craig. Thanks for such a lovely introduction as well. I think it's impossible to talk about business and financial markets in 2020 without mentioning COVID-19 and its impacts on all aspects of social, work, education and business life in Australia. It's simply influenced every decision in how we conduct our lives and also significantly impacted the economy, right from global mining giants down to daycare centres. Needless to say, the tragic loss of life has had a significant impact on social structure, combined with isolation and a mounting mental health issue as a result of these measures. And we touched on some of that last week as you rounded up earlier. If you take a minute to look at what happened during the GFC, you can draw similarities to what's happening now. All markets enter a high risk phase. Jobs are lost, all investment asset classes either lose value or become highly volatile. From a financial system perspective, we need to look at both why we have an advantage over the most seriously affected countries and what we've done about it. So thinking about Australia, it largely avoided catastrophe during the GFC as it did not have a heavily leveraged property market and was able to, that it needed to unwind, nor was it starting from a low interest rate base. So we had more room to ease financial measures within Australia. We were insured, if you like. Whilst the impact was significant here, it was less than what we saw in complicated communities such as the EU and the multi-leveraged property sector in the US. Also, importantly, the federal government supported the banking system by assuring bank deposits and wholesale funding guarantees. It entered into the covered bond market, it prevented the short selling of stocks, it looked at executive remuneration, retail investment protection, combined with a large stimulus package. And as a result, we saw no bank failures. Fast forward to 2020, and Australia, like the rest of the world, is frozen in the pandemic. And I think George has put a slide up there. That's from a couple of days ago. So it mirrors what we saw happening during the GFC, this massive fall off the cliff of the ASX 200 and all other indices around the world. But as the stimulus measures come into play, you can see the bounce coming back up and as we get control of the contagion. So again, we've got the advantage. We're an island, we shut the borders to contain the infection. We've got a single central bank. We've got a unified government and the ability for our banking system to act swiftly and in a coordinated fashion to prevent a meltdown. We've seen our four major banks shore up their balance sheets with the mix of capital raisings. They're also looking at dividend cuts, and after advising of a large profit downgrades compared to the same period in the previous year, they've trimmed their forecasts. NAB, for example, has increased its capital raise to $3.5 billion, which is a significant amount.
What does that mean for consumers, mate? Sorry?
Yeah,
what does that mean for the consumer?
For the consumer, it's a difficult time, and we've seen measures taken by organisations such as the Australian Banking Association has ratified the measure that if you defer your interest payments on your home loan for 6 months, it does not affect your credit rating. So this is a major lifeline for mortgage holders out of work. And it should be noted here that each individual needs to seek advice on whether or not accessing this relief is both in their best interest and how it may impact them in the future. It will also vary bank to bank as to the exact terms. As usual, pay attention to the detail and ask your advisor.
And what about for business? What measures have been put in place, or what can a business owner access to assist them during these particularly tough times?
Yeah, great question. The government, and again, this is from seeing what happened during the GFC, they've been very proactive following hot on the heels of the bushfire crisis. Another lesson learned back there, but lessons from the GFC mentioned earlier. Act early. Don't be afraid to use significant resources of the country to protect its business community. It's the large-scale government intervention we did not need during the 2008-2010 period that we are getting now. So for businesses, not being able to have face-to-face meetings in the financial services industry makes it very tough to keep business flowing. All of us are being forced to adjust accordingly. Meetings being conducted via FaceTime, Skype or Zoom, such as what we're doing now, and banks allowing this type of identification so long as it's recorded are all part of the new normal. But financially, the government has acted in this presentation who will provide some clarity on this situation. But a reminder again, you need to talk to your tax professional or see if your entity qualifies for this payment and how to access it. There's another measure as well. Yeah, sure. I was talking about the JobKeeper, and sole traders, partnerships, trusts or companies may also qualify and be entitled to this. And we've got a couple of really knowledgeable people following me in this presentation who can provide a bit more clarity on that situation. But, you know, as usual, a reminder, you need to talk to your tax professional to see if you or your entity qualifies for this payment and how to access it. You can log in through MyGovID. I'm not sure we've got the slide up for that. But if you do use that for your business, there's a COVID-19 access link on there for you to register, either for your employees or for the entity and the directors of that entity.
That's a really important point, and I will go into that in further detail with the girls, because I don't think a lot of businesses really understand how it works, but it is valuable. It's a great boost for businesses in these times, and those, particularly those who have employees, need to understand how it works and get on very quickly.
And also understand how you qualify, and that there are some housekeeping measures that you need to take every month in relation to ratifying the availability of that for your business with the ATO. But again, it's the government. Act early, take big measures, stop this this massive risk in its tracks, and help small businesses get back on their feet, or to a certain extent get through this pandemic.
And obviously that's going to help businesses. But what about cost cutting? What should some businesses be doing now to start reducing or restricting their costs?
Look, everyone's got to tighten their belt, I think, during this period. Any discretionary spending that you don't actually need, you need to start thinking about, do I need to spend money on that every single month? So, you know, some of the notes I put down were, during these difficult times, it's important more than ever to keep a track of your spending, either from an individual household perspective or when you track your business activities. Have a look at what you're spending money on today that you can do without for 6 to 12 months. Look at subscriptions and any unnecessary expenses. You know, sorry to the baristas out there who are probably, you know, struggling as well, but do you really need that extra $5 coffee every day? Think about it. If you're a couple, how much does that cost a week? Motor vehicle and transport costs are down, and we can all, as we're staying at home more, and you can quantify that immediately. Add up the saving and apply the same rigor to other expenditure. You know, everything adds up. Same applies, you know, if you're an advisor for your clients. Trimming unnecessary spending can mean the difference between cancelling or keeping things like your level of life insurance. Understanding what your level of or client's level of discretionary spending can have a direct impact on the viability during the crisis. potentially look at the other things are look at some cash flow management platforms. There are a number of coaching or self-access software tools available in the market. Use something like this to measure your position daily for the household and your business, and talk to your clients about it also. I think George is having some technical issues, but we had a screenshot of one available via the AFAN network. We're going to show a screenshot of a business finance module. You actually permission the software to collate your bank, credit card, debit card statements, really any financials associated with your business. And it models income and expenditure to show where you're really spending money. You can set up goals, objectives, or any forecast that you have of known upcoming expenditure to achieve your targets. You can line it up quarterly for BAS, etc., much like an accounting software package.